Good afternoon, everybody. Welcome to our Selecting an Option Strategies webcast. I'm Connie Hill. I'm happy that you would join me here today. How many of you could answer this question affirmatively? How many of you have a watch list that's ready to go almost at all times that you could use for almost any option strategy? We talk a lot about different option strategies in this class. One thing that we're going to do today, take some time to just get a nice watch list that you can use whether the market's bullish, bearish, sideways, whatever kind of strategy you might need to use. Okay, we're going to look at that. I'll show you how to run that, and then we're going to do some good example trades out of there today. I hope you're following me on X. I'm Connie Hill, CS. Post educational content out on my X account, things that I think are interesting and results of scans and so forth. I'll share that information with you. Now we have the pleasure of having Cameron May in our chat. And Cameron's here to help maybe answer some questions I can't get to. I'm going to keep my eye on the chat for sure. But if there are some other things that might come in that might be easier for him to answer for me, he will go ahead and do so. So thank you for being there, Cameron. I appreciate that. Somebody's saying this is your first class, Jim Massaro. Welcome, Jim, and anybody else that might be new. See, somebody's joining us from Australia. That's a little bit of a long jaunt, absolutely. And we're happy that all of you are here. We've got some familiar names, some new names, and I want all of you to be able to follow along today. Let's go through our important disclosures, then we'll lay out the agenda and get going on our busy agenda that I have for us today. Options carry a high level of risk and are not suitable for all investors. What we talk about today is intended for education and informational purposes. Don't consider it a recommendation. We're going to be using the Paper Money software application, what you download to your computer. It is used for educational purposes only, and I think it's a great place to test strategies as you are learning them or new rules. Investing involves risk, including the loss of principal. Past performance of any security or strategy does not guarantee future results or success. One thing I'd like to make you aware of is that in the Paper Money account, it does not do absolutely everything the live account does, but it does a good majority of it, which is why it's such a great learning tool. But it does not assign options early. In a live account, that can happen. And we talk about when that could possibly happen when we have some strategies we're looking at here. All right. Let's take a look where the market is. Feel free to chat in as I have you chat in every week. What kinds of strategies are working for you personally? It could be totally different for you than for your neighbor, than from your trading pal over in Australia, right? Could be totally different. Go ahead, feel free to chat those in. I think that's helpful to other traders as they're going, yeah, that's working for me, or maybe I should look at that particular strategy. One thing that's nice is Cameron teaches the Getting Options Strategies webcasts. So he goes through all of those strategies. This is a more advanced level class, and so we're not going to go into every single teeny tiny detail. All right, I want you to be able to follow along and stick with it. But if you're really kind of new to option strategies, that might be a class you want to absolutely hit up so that you get really solid on your basics as we start working with a lot of strategies together. Now, I do want to put a word in for some upcoming events that you might be interested in. Miami, here in December, and next weekend. Dallas is going to be that second week in January. We'll have a workshop there. And then we're going to have another one January 30th and 31st in Bellevue, Washington. So we've got 3 spots way across the United States, wherever it might be convenient for you to get to, or someplace you might just want to take a quick trip so that you can go to these events, market driving workshops. All right, let's head over to Thinkorswim. And Greg says, yeah, I could use some help with the watch list department. We're going to make sure we do that for you here today. All right, let's look at SPX. All right, what has been going on with the S&P 500? Do you feel it's maybe in a little bit of a sideways pattern? It hasn't totally reversed, right? It's got some great support here in the 6,500 area. Hasn't really broken down below that. But Could it be that it's maybe going a little bit sideways? Some people may have said, oh, maybe there's a little bit of a head and shoulders pattern going on. That's a reversal price pattern. Let me point out to you what that might look like. The head and shoulders pattern is where we have the index or stock rise to a certain point. All right, it rallies, pulls back, and then it rallies a little bit higher, which is nice. But then it rallies and it doesn't go as high as it did previously, right? So if you're looking at a person head on, you'd say that's their head, that's their shoulder, that's their second shoulder. Could it be forming that pattern? It could be, right? We've just got to wait and see. However, if it does another big move past and up here and maybe surpassing the head, yeah, then we're going to say, up, not reversal pattern is not happening. This stock is just or the index rather is just continuing on in a bullish fashion. Interesting today, the S&P and the NASDAQ kind of tracked with each other a little bit. After kind of pulling back a little bit earlier in the midday, it looks like we had a little bit of rally here at the end. We can see a little bit of a shadow, both on the NASDAQ candle and the S&P candle. And you might look at this and go, oh man, that may have a little head, shoulder activity. Would want to make it break, or not want to make it, but see it break the neckline to let us know that we're ready, or the market's ready to go maybe a little bit in a more bearish fashion. But we have had some, I'm going to say some churning upward, not past the previous highs, but still some churning upward, maybe getting in that sideways pattern. Volatility index, this is dropping, and it has been dropping here more recently, right? So it looks like it's closing here about 1581 today. So a little bit lower than that 1617 level that it's been at the last couple of days. So maybe just ever so slightly dropping a little bit, letting us know that maybe fear is not as rampant. But when we have our volatility at support levels, it's always good to be aware that maybe a reversal is going to happen. Just like we get a bounce off support of a price or an index, we could get that same sort of thing on the VIX. You can see maybe that might be around this 15 point something level. And if it did, that might be an indication that, oh, volatility is creeping back in. We want to make, note of that and adjust positions as we need to. Especially if it continues, right? If it maybe hits some support and maybe we get like a real big long candle day, that would let us know that volatility is really strong. Okay, looking for those tall candles. All right. Excellent. Cameron's pasted that link for his Getting Started with Option Strategies webcast. So you make it easy for yourself to find. Okay, let's jump over here back to our slides, and we're going to review what strategies we talk about a lot in this class. When the market's not trending real strongly, we will tend to maybe work with some neutral strategies, or some that are like slightly bullish to neutral, slightly bullish to neutral. Okay. So where we are doing some of these spread strategies, like say a short call vertical or a short put vertical, they're just kind of a little bit on the more neutral side. These where we say they're neutral, we're going to say it's neutral because either we're looking at it to be range bound, or because maybe we don't know a direction, like with a straddle, right? We might buy a long call, long put. I teach that class, Straddles and Strangles, on Monday afternoon, or Monday morning at 11 Eastern. And it's not necessarily so much a neutral strategy, but just one that's not geared to the bullish or the bearish direction. Now, I did not, let's see here if anybody chatted in here, what strategies they were finding working for them. David says a cash secured put worked out well for you. So that would be a more bullish strategy. Excellent. And there could be other strategies, right, that might be working in this environment. We'll start taking a look at those. First place I want to start is that watch list. I want you to have a go-to watch list. So whether you're trading a neutral strategy, a bearish strategy, or bullish strategy, you have something to work off of. Now, we've changed kind of some classes and what's been going on with some of those classes. But a class that I was teaching with short verticals, and we had kind of a nice little scan that we used, and we would update it once a month. Okay. We're going to go through that. We're going to build it for our class, and we're going to use it for probably about the next month, at least till the end of December, maybe as we get into January a little bit. Okay. If you don't have a good go-to watch list, I'm going to encourage you to take notes. Okay. And if you need to go back, review the session again, do. Okay. I'm going to assume that most of you are familiar with the Scan tab. Okay. We're right here in the Stock Hacker tool, and we're going to be looking for stocks that meet a criteria that typically will have options that are important or might meet a category that's important to us. Okay. So I just got a couple of criteria up here initially. So I've got the last price of the stock. This comes from the stock filter at $40. Why $40? You could go lower if you want, but if we want to use this watch list for both bullish and bearish strategies, it's nice if the stock has a little bit more room to drop, right? If it's a $40 stock, yeah, there's some room for it to drop. If it's already a $15 stock or a $10 stock, then there might not be nearly as much opportunity for it to continue to drop. Maybe it's already done a lot of the dropping. Okay, so that's why 40 is the minimum. You could put yours wherever you might want it. For our class, that's what we're going to use. And then I pulled up a study. Okay, this comes from the filter here. Click on study. And we're doing average volume. And the reason we're doing an average volume as opposed to the volume that comes on the stock criteria is because that has to do with today's volume. Well, if you want to create this scan and run it in the morning, you might not have a lot of stocks that really have done that much trading yet. So that's why we're going to look for average volume over the last 20 days. And we want it to be 2.5 million. You could go higher, you could go lower. Generally speaking, about a 2.5 million in volume activity in a stock will lead us to having more liquid options on the stocks. Guaranteed? Never. Nothing's ever guaranteed, right? But it'll have a tendency to bring those forward for us. Next up, liquidity. Okay. Liquidity in the options is really important. If you only have, some of the strategies we work with in here, we do 2 legs. In fact, most of them we do in here, we'd have at least 2 legs, sometimes 3 and 4. And if the spread is really wide, or there's not a lot of contracts, we might see a wide spread. And we don't want to see wide spreads. We'd like to see them as narrow as we possibly can because it makes it more efficient for a trader, makes it easier for us to get to some profit targets if we don't have a big old spread to make up. So we're going to do a couple of things here to help us find those kind of stocks. So what we're going to look at here is in the filters. So up here at the top, we're going to scan. I just had called this liquid options. Okay, you can call it whatever you want. We are going to scan in penny increment options. What's that? That is a public study. So that's something that we don't have to worry about upkeeping. All right. It's kept up for us. And we look under the P's. We're going to come down here, penny increment options. So it's a list of curated stocks that typically are trading in penny increments, meaning you go look at it and it's not necessarily trading in 20-cent increments. Maybe it's trading at 11 cents. Maybe it's at 6 cents. Okay. Something where we've got some pennies in there instead of, say, 10 cents, 20 cents, 30 cents, 25 cents type of thing. Okay. So that is going to be the first kind of area we're going to use to say, let's search in this list. And then we're going to run it past 3 different indexes. Okay. First one we're going to intersect it with is the S&P 100. Why? It's got a lot of large cap stocks on there. Typically, they are higher volume stocks, and that means it typically is going to lead us to more liquidity in the options. Does it catch every single stock that you might imagine you might want on your watch list? Not necessarily. Okay. But I've gone down here and I've changed my 50 results to 200. I don't think we're going to get 200 here today. And just with those parameters, we're going to go ahead and we're going to hit scan. All right, now this is showing, right now we've got about 72 stocks out of the 100 that qualify. Great. This is actually going to be the bulk of our watch list that we're going to create here. All right. So what we're going to do is we are going to export these results to a Microsoft spreadsheet file. And I already have open in the background, kind of just an empty spreadsheet, okay? And we're going to use the spreadsheet to build results on here. So we'll move it out of our way. We'll come up here and we're going to say export. And there's a couple different ways that we could do this. In this case, which way did I decide I want to do this one? We're going to do it to a file. And then we're going to go grab that file and bring it into the spreadsheet. Okay. So this is going to give it a name. When I was playing with it earlier, I had given it a name. When actually it came up from this, the watch list called it that, but I kept something similar. Okay. I'm going to call this, and you guys can help me. We're going to call this options. It's going to be our watch list, obviously, and I'm going to put the date 12/4. Okay, so that'll let us know when we ran it. And then maybe in a month or so, when it's time to update it, we'll do it again. Do we need to do it weekly? No, we don't. Do we have to do it daily? Oh, heavens no. Okay, it's going to be a list that we're just going to be working with for a while. And gradually, the elements of it change as different stocks come in, different stocks drop off. Let's go ahead and hit save. And then over here in Excel, we're going to go bring that up. All right, so we're going to say open. And I'm going to go to my, where did it go? Documents. Oh, let me go back. I think we're just going to do exports here. And that did not go there. Okay, let's try this one more time. I think we do want to go to documents. I think I've got a couple of export places. So let's make sure I go to the right, not desktop. All right, let's get down documents. There we go. And that is not working. Let me think here. See what I am off. Let's go here to our downloads file. And let's do, oh my goodness, let's do this one more time. Okay, guys, let's go to our export. I apologize. And then we're going to go to file. We named the file. Okay, so it's right here. It's in my documents, exports. Okay. And I called it options 12/4. Okay, so we'll just save it there again. And we'll replace it. Okay, it's the same one. And then we want to open it. Just kind of come out here. We're just going to do our open. And let's come down here to documents, exports, and then down here at the bottom, here's our options 12/4. Now at this point, what you need to do, there's a couple of things we're going to have to choose here to make sure that it puts it in the right format for us. Okay, it's going to start with a delimited, and that's fine. We do want it to be a way to break it up, the columns. We're going to hit next. And then this file format is called a CSV, which means comma separated value. And so it'll see that division and put a comma there, and then it'll lay it out there in commas or in columns for us. We'll go ahead and say finish. Now it moved it over to my other watch or my other screen. So we're going to open it up here. And this is going to be what we're going to use here. We're going to build off of it. So I'm going to clean it up a little bit. We don't need those right there. So we're just going to hit delete. And we only want column A. We don't need any of this other information. Okay, so we're just going to clean it out, hit delete, and then we're going to be building on that watch list. Okay, so far so good. All right, let's head back to Thinkorswim. And we like this. We like this price. We like the volume. The S&P 100, we're going to just change that. And this time we're going to go into the NASDAQ 100. So we'll choose NASDAQ 100, still looking for it to use that as a subsection to run on. Okay, looking for stocks in the NASDAQ 100 that are in the penny increment options list and have at least a $40 price tag and are trading on average over the last 4 weeks or month or so. And it's trading 2.5 million in shares. All right. Now, one thing you might notice, you'll go, oh, do you know what, Connie? I noticed that NVIDIA was at the top of that previous list. And you're right, it was. Okay. That's okay because technology cleans it up for us. So what I've done, I've just put my mouse up on NVIDIA, the very top ticker symbol, and went all the way to the bottom of the list. It's not as long as the first list. This one's only 41. And I've done what's called a Control C. Control C is your copy function on your computer. And so it will copy whatever you've highlighted. So here we've highlighted this. We're going to take it over to our spreadsheet here. And I'm just going to paste it in. Okay, brings up some of that same information, but really it's the ticker symbols that we need. And when we load it, it's going to get rid of the duplicates for us. Okay, so I probably actually didn't need to delete those columns yet because we're going to do this one more time. And we're going to go do it for the Dow 30. Okay, so this is again another public watch list. We're going to come down here to the public Ds. Dow Jones Industrial Average, and you would think, well, wouldn't all of them be on the list? And do you know what? Not all of them aren't. Sometimes some of those industrial stocks will tend to, maybe they're weakening, they're not having as much activity as they were when they were put on the index. And so interesting, we've only got 26 on there that qualify. Oh, look at that. NVIDIA's up there at the top again. I'm going to copy it again. I just highlighted it, Control C. We'll go back to our Microsoft list, and then we're just going to paste it in here at the bottom. And then we're going to just kind of come through here. If we wanted to clean it up and save it, we could. Quite honestly, we really just need the ticker symbols, regardless of how many times they're in there. So I'm just going to go to the top. I'm going to hold down my Control key. And I'm hitting my down arrow on my keyboard so that we can highlight all of it. All right, we're going to do another Control C. Again, that puts it in the short-term memory of the computer. And every time you do Control C, it overwrites what was previously put in there in the short-term memory. So now at this time, it's all of those ticker symbols. All right, now we're going to go back to our Thinkorswim. We've got our list here. Going to come back here. Let's open our site, and we're going to bring up a watch list. And we're going to come down here and say, create a watch list. That's what we're doing. So we're going to call this options 12 4-25. We're going to put today's date on it. We'll be more specific here, 12-4-25. And we'll go ahead and hit save. It's saying there's an error because there was extra ticker symbols in there. Let's see here. Oh, I clicked on one thing too soon. We're going to paste the symbols from the clipboard, the short-term memory. Notice what's up here first, NVIDIA. Now we'll say, okay. Now you'll be given a choice here to replace the current symbols or just only add the symbols. In this case, it's a new watch list. It doesn't matter. But if you were adding these ticker symbols, maybe to another watch list that you already had going on, then you'd want to make sure you click on the Add to Current Symbols. Okay. In our case, it doesn't matter which of those that we choose. Okay. Save. Why is it giving us an error? Oh, it doesn't like that name. Okay. Okay. We'll say, okay. We're going to call it Options Classes. How's that? Options Classes is different enough. All right, there we go. And here now is our Option Classes watch list that we're going to use. And again, we're going to come back to this list. We're comfortable with it because of the liquidity that it most likely is going to lead us to. That we could use for bullish, bearish, neutral, whatever most of those strategies that you might consider doing. Now, I do need to take a quick break here because there is a survey, and Cameron's posted that again for us. There's a survey out in the chat. And what we'd like to do is just have you fill out that survey. We do it from time to time, get your feedback, all right? And on this particular one, now the class isn't over yet, but if you'll just click on that link and fill it out before we get out of the class, or when it's time to go out of the class, we always appreciate you taking the time to do that. Now, Cameron, he's posted it up at the top of the chat as well. If that's easier for you to just go right up there where it's highlighted, and we'll remind you again as we get towards the end of our class here. All right, now let's go have some fun. All right, we've got our charts open, and now we have this watch list. Well, what do you do with the watch list? There's a lot of different things you can do for it, or with it rather. You might be looking for how much it's up or down today. You could sort it on that column. I've got a couple of links here that are a 1-month performance and a 3-month performance. And you might look at those calculations and see, if you feel like the market's doing X, say you think the market's still going up, maybe you're focusing on positive returns here. If you feel that the market's in transition and you might want a few bearish trades on your list, then you might be looking for negative performance here, right? Like say Airbnb, it's negative in both of those, 1 month and 3 month. Now I'm going to do a little sharing here with you. Number one, you guys are going to ask me if I can share the list. Because you're here in the class, I can share the list with you, but it's going to be dynamic, right? You're going to be building it, and the results would you might use it as a list like we're going to do in our class, or you might go out and build a scan. When you go out and build a scan and save it, then you'll have a dynamic watch list, meaning it'll just come in and filter in whatever is currently saved, what you did it on. Now, the reason we went out and built a different watch list is just simply because of this scan in and intersect with to get a subset of those watch lists. Does that make sense? All right. Any script we share with you is never guaranteed as to accuracy or timing. All right, so let's go share an options class with today's date. Those of you that are here, you're going to see this right now in the chat. Those of you that are listening to this on the recording, for you, what I'm going to do is on our first chart that we go look at, I'm going to go paste it in there so that you can see it too. And remember to load it, set up, open shared item, copy and paste the URL in there. And remember what you call it. Remember what kind of a script it is, right? Because in this case, it's a watch list script. So you would want to be coming over, say, to your watch list section to maybe review it. Now, something that we're going to do with it here, and what I did earlier is I said, well, I'm going to do it based on the charts. I'm going to make sure I'm linking them. Red in the one box, VIX, we're looking at the VIX, but one in the red box here, that we can go down through that watch list and say, hey, do I have a bullish entry that I like? Is there a bearish entry that I like? Okay. First one that we are going to use from the list is going to be ConocoPhillips. Now, energy and oil went sideways for quite a long time, and it kind of got in a sideways pattern. And then just recently, it seems like it's breaking out of what some people might have called a triple bottom here, right? If I draw that in, that's a reversal price pattern. We can see the stock kind of went down to that 50 or 85-ish and change area. And it was kind of going sideways for a bit until today. Today, it looks like it's having a pretty clean breakout, a little bit of extra volume that we're seeing here today that gives us an idea. Yeah, now on these scripts, yeah, they're never guaranteed as to accuracy or timing. Thank you for chatting that in there as well, Cameron. Good thing to always remind people. Okay. What would you think of this? You might think, well, okay, if energy is now starting to maybe be a sector that's starting to perform now, and there are a few stocks on this list that do come from the energy sector, they might be somebody that are a target that we might use here. Now, today, we would say it had a breakout entry. Now, it looks like it is closed today, really close to the high here. Let's see. 93.12, and the high was 93.20. Okay, so it did go 8 cents higher than where it closed. So really, it closed in a fairly strong position. We're going to put an order on. We're going to do a short put vertical on this one. And we are going to make sure that with this, that maybe this price of the stock goes up a little bit before it actually fills our order. Meaning we've been seeing a little bit of whips on this in the markets. And if tomorrow's maybe a little bit of a whipsaw day, maybe the market's down for whatever news comes in or whatever happens with crude oil, or maybe something specific to the stock, then we won't be getting into the trade. But let's see if it'll go just a little bit higher. When I say a little bit higher, I mean just a little bit, like a penny higher than today's high. So our high was 93.12. So we're going to put our entry at 93.21. We'll do it a whole penny higher, okay? And that is going to be our conditional entry point. All right. Roger wants to know how you get the 1 and the 3 month formulas. Let me share those with you. I've shared them in different classes, so some of you may have them already, which is just fine. Okay, this first one is going to be the 3 month. I can't do that yet because I need to, I don't want to copy that. I was going to put the, that's going to be the 3 month. Well, I'll do it this way. We'll go 3 months. For those of you that are looking at this in the recording, we'll copy over the 1 month. See if it'll let me copy it here. Oh, it's not going to let me. We'll say okay. And then we'll get the 1 month and copy it over. We'll say edit properties, and we'll just kind of do this below. Okay, this one is the 1 month. And then the other formula that I didn't put in here that I need to was the watch list that we created here together. Okay. And remember, those results are going to change. They are totally, run it one day, it could totally change. The formula that I shared with you is right here. So I'm just going to quickly copy it over. Starts with the exclamation point. We're going to come back here. We want to do it in the same note. Get that in there. And on this other one, yeah, I just want to just verify. You can either grab this much of the formula, or you can grab the URL where it says including the toss.mx/whatever. Okay, you can do it either way. What you don't want is the description to go in with it. Okay, you just want only the URL. And I'm just going to call this the watch list that is subject to change. All right, so those of you listening to this on a recording, there you go. Those of you that are in the class, let me just copy both of those and copy it out here in the chat. Okay, so those of you that are here live, you can just grab that URL and do your copy paste in. All right. All right, let's just make sure. Perfect. Let's move on. What kind of trade are we going to do? We're going to do a short put vertical. I think I told you that. It would be nice if the market does go a little whipsaw. It would be nice to be in a strategy where maybe we're not super bullish or super bearish. If the market's trending real strongly one direction or the other, then we might do some trending type strategies. If we're concerned maybe it's going a little bit sideways, then that's when we're like, okay, let's be a little bit more neutral with the strategy that we choose. In this case, we're going to just do a short put vertical. The strike prices we're going to go with are going to be the 90.8750, and we're not going to use December here. We're going to come out here to the January 16s. Some of these are not as liquid as I would love to see. Typically, I like to see a lot of liquidity here. We're not seeing a ton of it. So we're going to go a 33 delta, and we're just going to go 90.8750. $87.50. We're going to say share, sell vertical. 65 cents. That's a decent sized credit to bring into our account. 250 minus 65 cents is what is going to be our max. Let's see here. Our, the max gain minus the max loss. So whatever our credit is, that's our max gain. Whatever 2.5 minus the credit is going to be our max loss. So let's just do the math here real quick. Well, that's not the right math. We'll go 0.65 minus 2.5. I think I didn't get my little decimal in there. Is going to be 185. Okay. So we are going to risk more than what we have to gain, but the probabilities typically are in our favor. And what do we need this stock to do? We want it to go and stay basically above whatever the short strike price is at 90. Well, where's 90 on the chart? Well, 90 happens to be below where that old resistance is that should act as new support. So if in an ideal world we could sell something below that line, we would love to. Okay, so that's why we're going to be doing that one. Now, in this class, we can risk up to $1,500 per position. Doesn't mean we want to lose that amount, but that's what we're willing to risk. You got to risk something in order to trade in the market, don't you? So if we have 1,500 divided by 185, which would be the max loss per contracts, that's going to say, all right, you guys could do 8 contracts in our account here. We'll do a first order trigger sequential. We'll create an opposite order here. This opposite order is going to be to get out when we get a majority of our 65 cents. You get to choose what that majority is. Okay, for the moment, we're going to go 70%. If we got 70% of it, we only have 30% left. So we'll multiply that by 0.3. That says buy it back at 19 cents. We're going to plug that in so that it's sitting out there ready to go. All right. And we're going to make it good till canceled. We're going to do a confirm and send here. All right. That'll go into our class where we're going to track it. And really, if the stock goes up like we expect it to, great. If it goes sideways, like maybe it might, great. Goes down a little bit, great. We have a little bit of leeway here that we've given ourselves on the chart. All right. Next up, let's take a look at a technology stock, and we're going to kind of go pretty quick here. We're going to use Google. Okay, Google's on this watch list. If I scroll down, it'll highlight it there for us. What's going on with it right now? Now, this one, it doesn't have a hold. It might have looked like a hold earlier in the day, but the stock pulled back, so it's not a hold. But some traders like to get in at a support level. Okay, and I forgot to make our order that we just talked about conditional. So I'm going to take a pause. We may return to this. I want to go fix that contract we put in there because I told you we'd make it conditional and I forgot to create that condition. So let's do a cancel replace. And what we're going to do here, instead of having it be, we can still put it in as a limit order, but I'm going to change it to a market order. We're going to put on the condition here. And we might want to change that to GTC because we're going to have it be based on the price, right? We said we want the stock to go a little bit higher than where it was today. And that number was, I didn't write it down, did I? 93, oh, it was 93.21 is what it was. All right, 93.21, we'll put on our conditional order here. And we'll say, all right, stock, you have to go, we'll just use the mark prices, fine. And we're going to say greater than or equal to 93.21. That'll be a penny higher than the high. Let's just make sure on our verbiage that it is showing the correct way and that we want to do this. We could either change it to a market order. We could keep with this. This is saying less than or equal to. We really want it to be greater than or equal to. So we're going to switch that. And it might be about 65 cents. It might not. Okay. So to make sure that we can maybe get in on it, we're going to say we'll do it at a limit price. Let's link it with whatever the bid price happens to be at that time. Whatever the bid price is at the time it meets our stock price of 93.21, which should be close to about 65 cents. We'll have it go ahead and place that limit order for us. All right. That is the little fixing that we needed to do. All right. Yeah, day order will close at the end of the next trading day. Right now, the market's closed, right? So not going to do that. We're not going to have time to go into this one real deep. Okay, Google. On Google, we're saying we would do another conditional entry here. And let's see where it finally closed, or what its high today was 322.36. Let's make it say a nickel higher, 322.41. So we're going to put an order in on Google. I'll do that once our class is over in the interest of time. And on Google, I'm actually looking at using the January 2 options because they have enough liquidity here. And on the January 2s, we were going to maybe go like, say, 310, 305. Okay, we're going to sell that vertical. So I'll go out, I'm going to position size it, we'll follow up on it. Couple of things. I want to show you a couple of trades that are sitting out there that are still kind of ongoing. Somebody had asked the question in a survey, do you ever get out of a trade that's not working well? And the answer is absolutely. Every trade we put on, even though we think maybe it's got a great setup, doesn't always follow through. Doesn't mean, it's just the nature of trading, right? That's what happens sometimes. And so we do want to do that. What we're going to look at here is we had Reddit. And on Reddit, we had done a 210, 220. It was, let me show you the chart here. It was a stock that was really doing some downward trending. However, it basically broke above this diagonal resistance. Now, just because it breaks above the diagonal resistance doesn't mean we're going to be wrong on the trade, but it's staying in this area and it is staying above our short strike price of 210. So what we've done today, or yesterday rather, I went out, I bought back the short call at a big loss. We're going to hang on to the long call, called a change of polarity trade. We're going to hang on to that long call and we're going to watch it. We're going to step up stop losses, try to get back a lot of the money that we basically, when we bought the call back at a loss, we're hoping that it can do that. Now, is there enough time here? We've got about, on this one, we've got December 19 options. So we've got about 2 weeks before it expires. So that gives us the idea that maybe there's some time that we could have that happen. All right. If we were down to the last week, probably not likely. We might go, okay, just better close the trade. It's not working out how we expected. So that's the two things. One, we're wrong, and now it's showing us that we're wrong. And number two, let's give it some time to run up and make back some money for us. All right. A couple things. There is the survey out in the chat. And again, we always appreciate it when you fill out the survey for us to answer those two questions, on a scale of 1 to 10, plop those two questions. You can be done, or there are some questions you can answer if you would like to. Give us more feedback, more information about something you might like to see, which is great. Now, the other thing is, I really hope you become subscribers to the Trader Talks channel. We talk about this, but we have new folks joining us all the time, and not does everybody know how to actually do that. So there's that subscribe button down in the bottom right-hand corner of your screen. And then when you do subscribe to it, then it gives you this look where you can see some of our things that are coming up. So this is the last class of the day here, but we'll be open bright and early right at the opening bell tomorrow with Trader Talks in today's market. That'll be the next one coming up. And if you wanted a reminder to this or any other class, you could. It allows you to go into the playlists, so you could go back and look at previous webcasts that have been taught you can do it by, whatever class it is that you're looking at. Or if you see a topic that looks interesting to you as you scroll down, like something off our most popular list, you could just pop down there. run that particular one as well. All right, you guys, those are my asks for the day. All right. Somebody has a kind of a follow-up question, which I love, about won't theta decay be a problem for us? And I think what you're talking about is now we have the long call that we're keeping. Absolutely. That's something we definitely have to keep in mind. And so if it doesn't make progress, if it kind of dilly-dallies through here, yeah, time decay will hurt us. So we'll probably have to close it down, but we're going to give it an opportunity to see if it can gain back a little bit of what it, what we had to buy it back for. Excellent question. All right. Do you set a stop loss on an option outside of Thinkorswim in a regular account? There's a lot of ways you can set stop losses up. Don't have time to go into all those different ways, but yeah, if your trade's sitting out there and you want to do it in your Schwab account, go ahead, do it in your Schwab account. Paper money, or not paper money. We're talking about paper money, but you'll and doing your trades in there, but you do have the opportunity to do them in the other interfaces as well. All right, you guys, my time is up. I've got to wrap up. I appreciate your attention. Appreciate you being here today. Have a fantastic evening. Cameron, thank you for your help in the chat. And again, do the survey. We always appreciate that. Give us a subscribe and follow. All right, we'll see you next week. Bye-bye.